Welcome to the Jennifer J. Hammond podcast. Jennifer is a licensed realtor, educator, speaker, and best-selling author. Jennifer's goal is to help you find your yay in every day. Jennifer is grateful for the opportunity to educate, empower, and inspire you with powerful conversations, insights, and new viewpoints. Here's your host, Jennifer J. Hammond.
Hello. This is Jennifer Hammond. And I love anytime that we can bring you great information, especially how to make good decisions in real estate. And so we have Scott Shelton here. Yay! Welcome, Scott.
Hey, Jennifer, how are you? Thanks for having me on.
Thank you. I feel like you've been with me forever through so many of these ups and downs in the real estate market. And we're in another very interesting time with this pandemic. I mean,
We sure are.
This is like nothing that anybody has ever experienced before, at least our lifetime, I should say. And so first of all, let's go ahead and talk a little bit about first-time home buyers. This is a tough market for first-time home buyers because there's so many multiple offers, and not just in the Washington, D.C. area, all over the country. I'm hearing feedback from other realtors and mortgage lenders that this is a really tough market with these multiple offers. So first of all, let's go back to what mortgages should somebody who's a first-time home buyer, what should they be looking at? The FHA mortgage? What would you suggest?
Jennifer, that's a great question. Most of the first-time home buyers are looking for low down payment or no down payment. They want to minimize their out-of-pocket cash. So there's several different programs. FHA, if you're a veteran, VA, that's always zero down. But FHA, the Federal Housing Administration, offers 100% financing. And there's some conventional loans that offer 100% financing. So depending upon what you're looking for, the programs are available for first-time home buyers.
So what do people need to know about credit right now? Because the pandemic, a lot of people have had really challenging time with their work, and they're not having, normal work of, it's been steady for the last 2 to 5 years. So how are lenders looking at that?
Jennifer, that definitely is the truth. We've had some challenges when it comes to consistency of employment, and there have been more gaps in employment, 2 months here, 4 months here. So what we as a lender look for is 2 years of continuous employment in the same industry or profession. So if you do switch jobs, we're hoping that your gap is not longer than 6 months.
Yeah.
That's the critical piece right there, that your gap is not longer than 6 months.
And what about people switching jobs? Like if they've switched, because I know that usually is a negative against people because they don't have the stability, but a lot of people were forced, Scott, they were forced because of the pandemic. It wasn't their fault.
So if they've had to switch jobs through no fault of their own, sometimes that's not a problem. But how long again were you out of work? If you were out of work 6 months or longer and you switch jobs and change professions, that's a whole different set of questions you then have to answer. On the other hand, if you did switch jobs and you did switch professions, but you've been in your new job on a conventional loan, you've been on that new job for at least 3 months, we can use that income. But we can't use commission income. So W-2, hourly income we can use. If you switch jobs or professions and you're looking to do an FHA loan, you have to be on that job at least 6 months.
But 6 months isn't bad because I know a lot of times it was 2 years.
Yeah.
So 6 months is not bad. I want to say there's a silver lining there, right?
There is a silver lining. And in addition to that, most folks have had to pick up, due to the pandemic, part-time employment. Now, the standing rule has always been, and I don't think it will ever change, on part-time employment, you must have had part-time employment at least 2 continuous years for that income to help you qualify.
Otherwise, you can have that income, but it doesn't help the qualification.
It does not.
So a question I get a lot from first-time home buyers as well is about the if there's a husband and wife, if there's a married couple, and one I was trying to figure out which one should be the one. Let's say the husband is the one who has bad credit, but they're both working. Is it important to have both of them on there if you can so what are the options there? Let's just put it that way first.
Yeah, that's a really good question too. So we're going to have to really dig into that equation some and ask a lot of questions. Number one is the husband's income, because his credit has experienced some challenges and delinquencies. Is the husband's income needed to help qualify for the sales price of the home you're looking for? That's question number one. If it is needed, then we really need to know what that credit score is. So we encourage our borrowers to still apply online so we can run a residential mortgage credit report and see what that actual score is. I'll give you a real life scenario.
Please.
We had someone just recently where the credit was ran, credit score was 540. We ran the credit simulator, and if they paid off a couple of debts to the tune of a couple $1,000s, their credit score would then go north of 600 for a credit score.
Wow.
So in 2 months. So with that being said, we provide, for example, FHA loans, VA loans, USDA loans, rural housing loans, if your credit score is 600 plus. So now we've taken a potential homeowner who at once taken a look at it, did not appear they could qualify. We ran the credit simulator, gave them the equation for what they need to do over the next 2 months. And if they follow it to a T, guess what? They now become an eligible home buyer.
That is very good.
So we have options.
We have options. And that's the most important thing, is to know that we have options.
Yes.
Because again, it's been pretty bumpy, but I know a lot of people are really interested in buying for the first time when they've never bought before. And partly because so many people can work from home. But now I'm going to throw you a curveball, Scott. So what about those of us who are entrepreneurs? And
yes.
So our income is definitely, it's not quite the same as somebody who works for a regular company. So what about the entrepreneurs? What choices do they have?
So looking at entrepreneurs, which are also known as self-employed borrowers, first and foremost, you must have a 2-year continuous history of being self-employed. The most attractive program in the marketplace for a self-employed borrower right now is a bank statement loan program. When you have 2 choices, full documentation, that requires income documents such as tax returns. If the tax returns, because you have a very good CPA or financial advisor, and after looking at your tax returns, it's determined that there is not sufficient income to qualify. We then introduce the bank statement loan program, which then evaluates for the last 12 to 24 months your business bank statements and all deposits made to determine an income flow. And in many cases, there is sufficient income to qualify. These are not no-doc loans. These are still validated income-driven loans, but by way of bank statements, proof positive, so we can see and visually understand, hey, this income is coming in. So guess what? Self-employed entrepreneurs have a great opportunity to now qualify using bank statements to show business income versus tax returns.
That's really important, because I know there are a lot of entrepreneurs that are listening right now and are really interested in finding a way to get it. But now, one thing you said is that they need a 2-year history. So if somebody a year ago, when this pandemic really started, they ended up, losing whatever job they were doing, and now they started something new, but they only have 1 year of doing it. What happens to them? Can they still do a bank statement loan?
There are some opportunities out there that I have heard of, that bank statement loans for the 1-year entrepreneur or self-employed person does exist. I don't have all the specifics on that program, but I know that that program does exist, but they must provide at least the first 12 months of the new in-business bank statements for full review and income analysis.
Yes. Well, but it's possible. I mean, that's part of what I was just trying to get at, is that there
Options.
are products out there. There's options.
Yes.
So often people feel like there's no hope and it's just not possible. And that was part of my point. For a first-time home buyer, you've got products where you can have 0 down, which is amazing. And then the closing cost, as you know, from real estate, because I know you've seen this a million times, we can negotiate that the seller pays the buyer's closing costs, because the seller has their own closing costs, but you could negotiate so the buyer's closing costs, so they could go 0 down, have the seller pay the closing costs, and then be, again, go from renting to buying, and it be a very, very special, I want to say, unique transition that makes it amazing to all of a sudden become a homeowner, whereas they thought, oh my gosh, I had to sit back and wait and save 20% down, and now there are options for them, and that's my biggest point.
I would encourage, in light of what you just communicated, Jennifer, I would encourage every prospective home buyer to always, regardless of their situation, to have a conversation with an experienced lender to find out what is the raw truth, the facts about what's available. And there's so many lenders in our marketplace, so not even all the lenders can do the same things. So having a trusted real estate agent is super critical, because then someone who's trusted in that realtor and experience can then guide you and help navigate you towards lenders who have the experience to give you the information you need to make educated decisions.
Absolutely. And the thing I always talk about, it needs to be your yay team, because everyone on your team, your Scott Shelton, your money person, your real estate agent, yay, they should all help you say yay every day, right?
Yes, that's correct. That is correct. Options are available, but if you don't ask, you won't know.
And you're right. And I think that's such a big thing is make sure you ask. And to that, you went over this really fast. So I'm going to go back and have you highlight it one more time, because it's something that so often is overlooked. And that's that you were talking about that you have a very special software, and you can tell that if somebody does one thing or another thing, pays off some debts, that they can actually increase their credit score, and in a relatively short amount of time. I mean, you can do rapid rescores, but for the most part, that software you have, I think, is something that most people don't even know exists. Because if they knew, all I have to do is, we just need to, and maybe I pick up some extra shifts, or I do one extra or something, and then I can pay off that couple $1,000s there, or pay off this. So will you talk a little bit about what is that?
Sure. The credit simulator, the what if simulator, most lenders have access to that through the credit company that they use to pull a residential mortgage credit report. So lenders in this day and age, all of us have access, but not all of us use it. And that tool is very helpful when someone is trying to understand, what steps do I need to take in order to be able to qualify to purchase a home, and have the reality of turning that dream into something I can tangibly have every day and start to build wealth. So looking at the big picture, we can help analyze that credit report. And then we put in certain what if simulations. What if they paid this credit report, paid this debt off? Or what if they paid the debt down? For example, most people think they need to pay their debt completely off.
Yeah.
The credit score model likes debts, revolving debts, for example, where the balance is only 30% or less of the high credit limit. So you may not need to pay it off in full, but you may need to get it down to 30% of the high credit limit, the balance, or less. So knowing those kinds of facts will help you make educated, wise decisions.
Yes. And that was one of the reasons I wanted you to talk about it, because it's amazing to me how many people, and what you just said also, you slipped it in there. You just tucked it right in there, is that not all lenders use it, although most have it.
Yes.
Not all use it. And I think it's such a shame because, again, you could end up getting more clients and be able to help more people get the money they need to be able to purchase a house if they knew that there is a way. Because so often when someone hits a no and they feel helpless because they're like, oh, it's just so daunting. I'm never going to be able to pay off all my debt, because I just changed jobs and I'm building up, or because I just started a new business. There's a million reasons why someone can feel like it's never going to happen.
Yeah.
And the same thing with, saving up 20%. It can feel like it's just never going to happen. Right. So knowing that you can use that credit simulator software is just so wonderful.
Incredible.
Yay!
Yeah. We need to educate more and dispel some of these myths. You don't need 20% down.
Yeah.
You don't need a 750 credit score to be a homeowner. You don't need, if you've got a blemish or two on your credit history, or even had a major housing event like a foreclosure or short sale or modification, you still, within certain parameters, have options available to you. So you just need to ask the right people to get the appropriate answers.
I love it. Yay! So Scott, I want people to know, how do they get in touch with you? And I know you have a great team with you too, right?
Yeah, I do, Jennifer. Scott Shelton, Security National Mortgage. The best way to reach me is email Scott with 2 T's, SCOTT .Shelton, SHELTON SNMC.com. SNMC.com.
And I'll make sure we put that down in the comments as well. It's really important that people can reach out to you. And so again, I know you're not in all 50 states, continental states. Where are you licensed?
2 states we're not in, New York and Massachusetts.
Okay. But everywhere else, Florida.
Yep.
Georgia.
We can handle the rest.
Yay!
Yes.
Well, yes. Scott, it's always a pleasure. I'm so thankful. Thank you so much for being with me today. It's always fun. Yay!
I enjoy spending time with you, Jennifer.
Well, I am so grateful that you do all that you do and that you help so many people and that you're so passionate about educating people as well.
Yeah.